Welcome back to Morning Markets on Tuesday the 8th of August. We're coming to the end of earnings season for public companies reporting revenue and profit growth for the second quarter of 2023. So far, of the companies who've reported, 79% of those have provided better revenue and profit growth than expected. Stay tuned to find out why. So to set the scene, if we look at the top 500 companies in the US, then sales growth has been slowing since the summer of last year. But if we look at profits or earnings growth, we've actually seen contraction for 2 consecutive quarters. They contracted 1.9% in the final quarter of last year and 2.9% in the first quarter of this year. The current run rate for the second quarter of 2023 is negative 5.2%. The biggest fall in profits has been seen in the energy companies, where currently earnings for those companies reported in the sector are down around 51% if we look at the quarter relative to the same period last year. The reason for this is oil price is a big contributor. It's down 32% on a comparative basis. The material sector has also been challenged by lower consumer demand, and healthcare is another area where there's been challenges. If we just take a number of examples of specific companies, you've got Moderna, you've got Pfizer, who have been some of the key names which have been dragging down those earnings growth numbers. If we take Moderna, demand for the COVID-19 vaccine is down around 94% on the same period last year. On the supportive side, one of the biggest sectors providing contribution has been consumer discretionary, which we're seeing earnings up 52% over the same period. One of the key companies within this is Amazon, providing that tailwind. Amazon, in their earnings report, have demonstrated the benefit of the investments which they've made to reduce supply chain delivery times and transportation costs through having localized sales depots. They're also demonstrating the strength of consumer demand, with Amazon Prime Day in the second quarter being their strongest yet in terms of the total number of sales. They also discussed, in terms of a forward-looking basis, the opportunity which they see for further integrating artificial intelligence into their current business model, but also supplying other businesses with the technology which they've developed, all of which share prices responded positively to. So where do we go from here? Well, analyst expectations and projections are suggesting that we're currently seeing the bottoming out in terms of those earnings declines at this point in time. For context, Bloomberg analysts anticipate that earnings growth of negative 8% for the second quarter and then negative 0.8% for the third quarter before returning to positive 8.2% for the fourth quarter, where if you put it all together suggests earnings growth for 2023 will be relatively flat. But if we look into 2024, they're anticipating earnings growth of over 12%. So bottoming out in terms of earnings declines, which we're seeing within the marketplace, recovering into strong double digits for 2024. Thank you for watching. We'll continue to keep you up to date on the earnings season in the US through the coming weeks. Thank you.